Hey guys, what is up? Welcome back to my channel. In this video, I'm gonna talk about two of the most common investing strategies, which is growth investing as well as dividend investing. If you have no idea what kind of stocks to buy or what strategies that you want to look at, then stay tuned until the end of this video because this video is potentially what you are searching for, and this will help you so much in selecting your stocks. But before that, can I have you help me smash the like and subscribe button down below, and it helps me so much with the YouTube algorithm. Thank you so much. Now without further ado, let's jump right into today's video. Now, I'm not gonna regurgitate everything that you can find online already about dividend as well as growth investing. So I'm just gonna quickly summarize through what are the main differences of dividend and growth investing, and hopefully you have get a better picture of what are they. And after that, I will share with you which strategy do I prefer. Is it either one or will it be both? And hopefully that will give you a better idea. First of all, let's define it. Dividend investing are essentially dividend stocks that you buy which pays consistent dividends to shareholders. And whereas for growth investing, you are buying growth stocks that reinvest their profit and usually do not pay dividends, or even if they do, very little of it. In terms of capital gain of its share price, dividend investing has a lower capital gain, whereas for growth investing, they have a higher capital gain. In terms of dividend yield and payout, well, obviously dividend stocks gives you higher dividend yield and payout ratio, whereas compared to growth stocks, they provide lower to none dividend yield. In terms of how do you profit from them, with dividend investing you get consistent dividend payment and you reinvest them, and essentially you are just capturing the benefits of compounding interest. Whereas for growth stocks, you sell them at a higher valuation compared to when you bought them. And the spread between that difference is your capital gain. Next, let's talk about risk and volatility. Dividend stocks usually have lower risk and volatility. That's because they are usually more established companies like blue chips and also large cap companies. Whereas for growth stocks, they usually have higher risk and volatility. This is because they are usually less established companies ranging from small to medium cap companies or just from the emerging industries. Next, there are sectors and industry and where you can find them. For dividend stocks, you can find them through financial services, which is banks in general, as well as REITs, real estate investment trusts. Whereas for growth stocks, you can find them via technology stocks, healthcare, or maybe emerging industries. In terms of their resilience and performance in bear market, such as recessions, dividend stocks usually perform averagely, whereas growth stocks, they perform poorly because they have lesser working capital and it will be harder for them to manage their cash flow. In terms of valuation methodology, it is easier for you to value a dividend stock because they have historically proven business model with consistent cash flow. Whereas for growth stocks, it is harder for us to value because most of their value lies in its future growth or cash flows. In terms of financial ratios that you use to value them, dividend stocks can be evaluated with dividend yield as well as dividend payout ratio, whereas for growth stocks you usually look at the PE ratio, the EPS, as well as the PEG, the price to earnings growth ratio. Now the question comes, which is the better strategy? Is it growth investing or dividend investing? And to be totally frank with you, it's hard for me to give you an answer because even professional investors, seasoned investors, as well as millions of fund managers, they would also find it difficult to give you an answer to that question. Now let me explain to you why in two key points. One, the market is constantly changing. On one side, yes, dividend stocks give you the stability of cash flow and it gives you a sense of security in your portfolio. But on the other side, investing in growth stocks gives you the element of surprise as well as tremendous growth for your portfolio. For example, in the energy industry, if a renewable energy company is able to come up with a solution that costs lesser than the traditional fossil fuel, then rest assured you know their share price is going to grow in multiple folds. Or another example I believe you can better relate to it, which is the pharmaceutical and healthcare companies. At the face of the current COVID-19 pandemic, if any healthcare company is able to come up with a COVID-19 vaccine or even any vaccine to treat diseases such as HIV, cancer, or any other disease, then I believe you will agree with me that the share price or the valuation of the company will follow and grow as well. Just look at Tesla in the United States. They have recently launched their reusable rocket boosters and managed to break through with the saving of space travel costs via SpaceX. And what comes with it? The growth of their stocks over the past few months, ever since the successful launch and landing of the rocket boosters, have skyrocketed their share price by so many times. Now, of course, it's not fair to use all those fairy tales and unicorn stories. So let me just use Apple to show you what a growth company typical looks like. Now, just for information, of course, Apple is a very big company, but essentially they are growth stocks and not dividend stocks up till 2012 because Steve Jobs does not want to pay dividend for the purpose of reinvesting the profit into their company for growth as well as for tax benefit. With that in mind, Apple consistently grown their profit and increased their customer base year after year. And as a result, as you can see from its share price, it never looked back and just went higher and higher. Now, the second reason why I can't tell you which strategy is better is because everyone's risk appetite as well as preference is different. As I've mentioned before, if you can't take on too much risk, then probably dividend investing will be a better and also more sound choice for you. Of course, that is not to say that dividend investing is a sure win strategy that guarantees you a return and it is a better strategy all in all compared to growth investing. Just because the company has a high dividend yield and also a high payout ratio does not mean it is easier for you to compound your interest and also your return year after year. Thank me later for these tips, but beware of dividend traps. When it comes to dividend investing, there's a lot of companies giving out high dividend yields to retail investors just to lure all the retail investors to buy their stocks. But a simple logic will tell you if a company is consistently not growing their capital or even losing their capital value, then your net return would be negative in total. Let me take an extreme case in Malaysia just to illustrate what I mean just now. Let's look at British American Tobacco Malaysia Berhad. They have a pretty high dividend yield of around 5 to 10% per annum, which sounds really good, but then wait a minute. If you look at their share price, it just kept dropping and dropping. And safe to say, in this case, your net return would be negative. Now, I'm not gonna waste your time and do the detailed maths of adding the dividend yield plus the capital losses. But if you do that, you should be able to compute the net return of negative and you would have understand what I've meant. Now, with that said, what about my personal preference? I'm gonna be super transparent with you. My current portfolio is mainly dominated by dividend stocks, and that's about 84% of my portfolio. And that is solely because I started with dividend stocks for the stability of it while learning about stock investing as a beginner. So you must be wondering, how did the dividend stocks in my portfolio fare for the past year? And let's just say the REITs in my portfolio have been struggling because of the current COVID-19 pandemic. And with that, there's a lot of closures of shopping malls and hotels.
Or you see someone that you know and they ask you how you are, and you just have to say that you're fine when you're not really fine, but you just can't get into it because they would never.
And yeah, they have taken quite a hit, but in terms of financial services, they are still doing pretty good because I've received quite a high amount of dividend in the past year. Hashtag Tiger Bank. But all in all, I have faith in my dividend stocks, and I believe once the COVID-19 pandemic is over, they should be able to recover their capital value. So really, there's no need for me to panic sell or maybe just relocate the capital into another growth stocks just because the dividend stocks are struggling, or should I say that particular industry is struggling due to the current outbreak of COVID-19. But moving forward, I do have plans to reevaluate my current portfolio and readjust them to include more growth stocks. And that is because I've learned to accept losses, I can manage my emotions, and I've ultimately learned so much more throughout this past 1 year, and I can better evaluate all those growth stocks, as well as to just better filter out all those noises that you wouldn't want to hear or you shouldn't be hearing, because those noises will ultimately affect your stock picking decision. So ladies and gentlemen, really, it's a matter of preference. If you are still young, like I do, and you know what you are doing, then by all means, go ahead with growth stocks. But if you have more commitments in life and you are just generally not that good in controlling your emotions, then do not feel embarrassed and just go ahead with dividend stocks. And that is because their capital preservation is much better compared to a growth stock. Or if you still can't decide, just like every Malaysians can't decide for their next meal, then go ahead with the mixture of growth and dividend stocks. Why not, right? Just go ahead and readjust them as the time progresses, and you will find what you like and what you don't like. And just make sure that you are able to handle the psychological as well as emotional stresses that comes with it. After all, investing is about doing your own homework, choosing your own stocks, and just buying into companies that you think is worth your money.
I'm not going to judge your journey. It is your fantasy.
Alright, with that said, I've come to the end of this video. If you gained some value out of this video, please help me by hitting the like and also subscribe button. It helps me so much with the YouTube algorithm. Remember, no one strategy is better than the other, and no investments in this world can guarantee you any return. And if they do, trust me, just turn your head and run as fast as you can. Okay, thank you so much for watching, and as usual, I will see you in the next one.